We just saw a massive policy shift that pushes mortgage rates down to 5.99% for certain scenarios this morning. It is Thursday, January 15th, 2026. Today's market in one sentence is stable but reactive. The biggest change this week is rates because it is responding to the new government pressure. I'm Cathy Sabater. I'm licensed in California, Texas, Florida, Nevada, and Georgia. So while I'm covering the national news that moves the 10-year Treasury, remember that insurance costs in Florida or property taxes in Texas will change your specific payment, and I'll help you with the math. What changed? The new administration is discussing a major housing plan. Normally, I will be talking about the inflation reports, but today's driver is political. This administration is discussing a major housing plan, and the market is reacting it in two different headlines. I'm sure you heard about the credit card cap, a proposal to cap credit card interest at 10% for the first year. And this is to help consumers pay down debt. And number two, the mortgage move. Fannie Mae is stepping in to buy $20 billion in mortgage bonds. What does that mean for you? Well, this is a synthetic push to lower rates. And because of this bond buying news, we saw pricing improve immediately, breaking that 6% ceiling and dipping into the high fives. But is it permanent? Probably not. This feels like a temporary window of relief, not a permanent new baseline. The three numbers you need to know if you're looking to buy, here they are. Number one, as I always discuss, the 10-year Treasury. Now, the 10-year Treasury is having a fight. And what is it fighting? Well, it's fighting the economic news from yesterday's CPI report, inflation, and it pushes rates up. Now, this new bond buying plan is pushing rates down. But right now, the downside is winning, giving you a sweet spot to lock and or get off of the fence. Number two, inventory, sources N.A.R. And according to National Association of Realtors, inventory is limited relative to demand. Historically, in January, we see a low supply. There aren't a ton of homes to choose from yet, but the spring rush listings haven't hit the market. So if you see a good home, you are more than likely just competing against two or three other people, not 10. Number three, days on the market. N.A.R., National Association of Realtors, shows that homes are sitting on average, remember, nationwide, 44 days as of December 2025. If a home is active for more than 30 plus days, the seller is nervous. That is where you ask for credits to buy down your rates even further. The buying strategy. With rates dipping to 5.99 temporarily, here's your playbook. Lock, don't float. This bond buying is more than likely temporary. If you have a contract, I'd recommend that you lock. Don't gamble. We're not going to see 4.5% tomorrow. Focus on stale listings, right? So if you combine that with the seller credit and it's been sitting, more than likely you have a unicorn deal. Avoid the wait trap. Don't wait for the 10% credit card cap to become law before you buy. Policies take months. Rates change in seconds. Seller strategy, sell to buy. For my sellers, especially if you are selling to buy up, this rate dip is your friend. Lower rates bring more buyers into the pool who are priced out last week. Pricing reality. You cannot base your price on next year's housing plan. You have to price for today's inventory. How about concessions, seller credits? Expect buyers to ask for closing costs. In high cost areas like California and Florida, Buyers are cash poor due to insurance and taxes. Giving them $5,000 or $10,000 in credit is often better than dropping your price by $20,000. Another note, real estate is local, especially if you're selling to buy, not sure if you're staying in the state. So Nevada and taxes are usually more payment sensitive month to month because of property taxes. California and Florida are high sensitive due to insurance costs right now. So a 5.99% rate helps everyone. But the strategy changes state by state. If you want to know the math for your specific zip code, comment mark it. Let me know the state you're in and the state you may be moving to and your price range, and I'll reply with this week's shift and how it affects your monthly payment. I'll see you next week.